Welcome back to the Wall Street Podcast. Today we're doing a critical deep dive into UBS's September 2, 2025 report. It's titled OpenAI, a deep dive into its growth drivers and the impact on Microsoft, Oracle, and the broader software sector. We're basically dissecting OpenAI's explosive trajectory and what it really means for the market.
For you, right. This UBS report, Kierstead, Marriott, and Faya are the authors. It gives a pretty comprehensive analysis. They're projecting OpenAI's 2025 revenue around $15 billion, but also estimating an $8 billion operating loss for that same year.
Wow, $8 billion loss. That's a lot of spending.
It absolutely is. It really underscores this hyper-growth phase they're in. The report also digs into their status as, well, the biggest consumer of Nvidia GPUs. That's key. And it looks at the shifting relationship with Microsoft, plus, importantly, their major compute diversification. We're talking Oracle, CoreWeave, and Google.
Okay, so not just Azure anymore.
Not just Azure. And they also assess ChatGPT's competitive heat on Google Search. It highlights some pretty critical shifts happening in software.
Let's focus on that compute appetite first. You mentioned the $8 billion loss, obviously huge investment. How is this just massive demand reshaping the cloud infrastructure market?
Well, OpenAI's GPU hunger has definitely been a big boost for Azure's revenue, no question. But the newer commitments, these are really substantial, and they show strategic diversification. There's an anticipated $30 billion commitment to Oracle by fiscal 28. That's huge. Plus, big deals with CoreWeave and also using Google Cloud for training and inference.
$30 billion to Oracle, that's staggering.
It is. And what's really telling, I think, is Microsoft's right of first refusal on some of this capacity. They apparently had the option to match or block these deals.
But they didn't exercise it.
Seems not.
Wow.
Which, introduces some risk for Azure's dominance there, but it's a massive potential upside for Oracle.
So what does that level of commitment, especially outside Azure, signal about OpenAI's long-term compute strategy? Are they trying to avoid vendor lock-in?
I think that's exactly it. It's a clear move to spread the risk. Optimize costs, maybe, for different types of workloads. They're avoiding putting all their eggs in one basket, even with Microsoft as a major investor. It's basically a multi-cloud strategy for resilience, maybe better pricing power, too. It's changing the game for cloud providers.
Definitely reshaping the landscape. Now, speaking of that evolving relationship, what are the key things being renegotiated right now between Microsoft and OpenAI?
Okay, yeah, the talks are active on several fronts. First, Microsoft's IP rights. They're likely looking to extend those beyond the current 2030 expiration. Then there's the revenue share, currently 20%, but that's expected to come down given OpenAI's scale now.
Makes sense.
Also, Azure's exclusivity for hosting OpenAI's APIs, that might be loosening, allowing for, well, diversification there too. And finally, Microsoft's equity stake. It's estimated around 35% now, but that's also part of the whole complex negotiation, the outcomes here. They'll have really significant stock implications, especially for Microsoft.
With all that on the table, does it suggest a kind of shift in the power dynamic within that partnership?
Oh, absolutely. OpenAI's growth, its valuation, it gives them way more leverage than they had when the first deals were struck. These renegotiations really reflect that. OpenAI can push for better terms on things like revenue share and infrastructure flexibility. Microsoft, meanwhile, is trying to lock in those long-term IP rights to protect its huge investment. It's a fascinating dynamic.
Okay, let's pivot slightly. OpenAI's product strategy, they're moving into coding tools, creative AI, agents. Does this validate that whole models eating software idea?
Yep.
Or does it actually counter it?
A bit of both, actually. Their expansion does directly challenge existing SaaS players in those areas, no doubt about that. However, the report points out something crucial. AI monetization seems to be happening mainly below the application layer.
Meaning infrastructure, platforms, API.
Exactly, not just standalone apps replacing everything. And what's really interesting is that OpenAI itself uses a lot of third-party software. Think Datadog for observability, Oracle ERP for their own financials.
So even they still need traditional software.
Right. Which suggests continued demand. It kind of counters the idea that models will just completely swallow traditional software whole. What it does indicate, though, is maybe a shift in investor focus, more towards those infrastructure and data plays, perhaps less purely on the SaaS application layer.
So for you, the listener, if AI money is mainly below the application layer and even OpenAI needs traditional tools, what's the takeaway for investing in software?
It suggests a need to reevaluate where the value is really going to accrue. Companies providing the foundational layers, the compute, the data infrastructure, the platforms enabling AI, they seem really well positioned for growth. AI enhances traditional software, yes,
Yeah.
but it isn't necessarily replacing it outright. It's driving demand for more powerful underlying systems. That changes how you might look at software investments.
And thinking bigger picture now, these huge investments, the compute demand,
Mm.
what's the broader societal impact? How does this affect us, in our daily lives?
Well, OpenAI's growth and this massive need for compute power are driving just unprecedented global investment in AI infrastructure. That hits everything from energy grids and sustainability concerns to the semiconductor supply chain, hardware manufacturing. It's huge for you personally. It likely means faster, deeper integration of AI into the tools you use every day, both at work and at home.
More sophisticated AI assistants, maybe.
Precisely. In your work software, consumer apps getting smarter, more seamless. It really accelerates the pace of innovation. It's fundamentally changing how we interact with technology, and it's setting the stage for future developments we probably can't even fully imagine yet.
OpenAI clearly remains a pivotal force here. Its finances, its partnerships, the market disruption. These aren't just tech stories. They are crucial indicators for investors about where capital and innovation are headed. The question now isn't really if AI transforms industries anymore. It's more about how quickly that value shifts and, frankly, who manages to capture it. Something to watch very closely.